Hey everyone, welcome back to the TraderLion podcast. I'm your host, Richard Moglen. Joining us today is someone who I really enjoyed talking the markets with, Charles Harris, who is an experienced trader and a portfolio manager over at O'Neill Global Advisors. Charles, thank you so much for taking the time to speak with me here today, and welcome.
It's a pleasure. Thank you, Richard. I appreciate it.
Yeah, and to dive right in, I'd love to just kind of start with my standard question, which is how did you first basically get interested in the markets and first start trading?
I've always been fascinated by the markets, and I've just always had an interest in stocks. I had no clue what I was doing early on. I guess I got interested probably during in high school. I used to watch Wall Street Week with Louis Rukeyser on Friday evenings on public television. And then when I was at UCLA, I had a small account of a few $1,000, and I remember I used to go to the UCLA library and scour through the old newspapers, or just newspapers, but kind of current, and some of the journals they had just for like low PE stocks. And that was like my only strategy, was looking for low PE stocks. And I didn't really have any success. I mean, I think I kind of just held my own for years. And then I got a friend of mine when I was in college said, you should put your money in Fidelity Magellan. It goes up, 3% a month, which is what it was doing. And I'm like, okay. So I put my money in literally like 2 months before the 87 crash, lost a third of my money right off the bat. And then I really didn't trade with any kind of purpose or strategy until I joined O'Neill. And even then it took me a couple of years to kind of figure out like what I was doing and like what my approach should be for me and what would kind of fit my personality.
Right. And how did you actually end up joining O'Neill? What was kind of the path to
Okay,
joining the
so
firm?
at the time I was working at a small real estate consulting firm, and I wasn't loving it. And a cousin of mine was a Wall Street analyst, and he said, you should get into, you should be an analyst, make tons of money. This is during the mid 90s, so the market was hopping. And what I was doing at the real estate firm was very close to kind of stock analysis, but for real estate.
Right.
So it's kind of a natural transition, but I didn't have an MBA, so it wasn't really easy to get my foot in the door. So I just went to the job boards, and O'Neill was hiring for research analysts. So I interviewed, I got hired, and I actually never thought I'd be. I just thought it was a stepping stone to being a sell side analyst. But I kind of, that's all the resources were there, and I started to trade, and I got that bug, and I guess something good happened. And so I've been there ever since. So I've been there since 95. I'm one of the oldest employees there.
And did you know anything about William O'Neill before you joined, or is kind of after you actually went there that you read the book and kind of started that
Yeah,
process?
I knew nothing about O'Neill. I just wanted to get my foot in the door, and they were
Right.
hiring. It wasn't until I got there that I read the book and I had access to all our research and the charts and real-time quotes. And it was like, oh my God, like, I used to come in on weekends and just screen for stocks, and kind of, I guess in a way, I kind of figured it out on my own, because I've my style's always been a little bit kind of buying pullbacks and looking for turnarounds. And it wasn't like I had to kind of get oriented toward buying breakouts and buying stocks at new highs. Like that was kind of a foreign concept for me. When I started, I was coming off of, low PE stocks, so it was just a completely different mindset. But I've done, like, I would say my style takes into kind of a lot of different strategies. It's not just buying breakouts. And I think if in order to be successful in the market, you have to be able to adapt to what's working. And if all you know how to do is buy breakouts, there will be periods of time when you'll perform great, but there's going to be many times when your strategy just isn't going to work. and it's just in a way becomes too obvious. So you have to be adaptable, and so I have lots of different things I do, honestly. But
Yeah, no, that's great. And it was, I guess, a year and a half ago where you gave like a really great presentation talking about your pullback buying methods at our conference. So I'll kind of link that above right now and in the description if anybody wants to check that out. I'd highly recommend it. And I wanted to kind of dive a little bit deeper into your time at O'Neill, and also kind of your performance during the 90s bull market. What were you kind of doing in your personal account, and how did you kind of get noticed by O'Neill to get picked to become a PM and then be a part of that nice move before obviously the bear market?
yeah, so I didn't become a PM until 2000. So actually, I became a PM 3 months after the bubble burst. So it wasn't really the most opportune time to start running money for the firm. But I joined the firm at the end of 95. My first foray into the market was pretty much because I had access to all this data and research and outside research. I pretty much just looked at the broker reports and what brokers, analysts are recommending. And I said, I was very swayed by this research, and I thought, oh my God, like it's a gold mine.
Right.
And it took me about a year to figure out that they didn't have a very good track record and it was not a good strategy. And I lost money. I lost probably half my money in that year. And I had no money to begin with. And I started with a few $1,000. So anyway, it was the end of 96. I wrote down kind of my rules, and I wrote down really I kind of did a deep dive into my own personality, because I think you have to trade in line with your personality. Everyone is like, oh, I want to be like Bill O'Neill. Well, Bill was Bill, and not everyone can be like him. He was um he won he was like ice cold veins. I mean, he could take the pressure, he could handle concentration.
Yeah.
He was very quick on the dime. He was very, very humble, very quick to realize when he was uncomfortable or wrong and reverse the position. I mean, not everyone has those skills. Some people just are a little more risk averse. I mean, I'm not, but actually, I do trade with a lot of concentration and risk, but it's not for everyone. And it doesn't always work. And certainly had my ups and downs in the market. But to answer your question, I started having success in 97, following more of a swing trading approach. And I just determined to myself that I was a singles hitter. That's where my sweet spot was. And my goal was to hit singles and compound my money as quickly as I could. And that's what I did. And in 97 was my first big year. Now, mind you, we were in a bull market, so
Right.
I can't take all the credit, but it was a very good trading environment, and my account was up about 700% in 97, and followed by about another 100% in the first half of 98. And then we had our first bear market that I experienced, which was the long-term capital blow up and
Yep.
that little 3-month 30+% pullback in the NASDAQ. And I lost about 2/3 of my money, not knowing how to handle a bear market. I just kept trading and kept losing. So at that same time, I got my CFA designation, and I started to look for another job. And thankfully, I didn't get another job, because when the market turned in 98, after the Fed cut rates, we started really the last leg of the bull market. And I had a huge 99. I was up over 1,000% in my personal account. And that was really when I started to make real money. Because
Right.
again, I started with a very small base. So, to turn a few $1,000s into hundreds of thousands and then millions, it takes time for that to happen. But we were in this crazy environment where things were happening. And that's when I got noticed by O'Neill. And really, the story behind that is I never worried about being a PM. I never really even thought about it. My goal was just to make as much money as I could for myself because I knew that would give me the freedom to do what I want to do. And Mike Webster, who was a good friend of mine and was also in the research department, kept setting up these meetings with Bill and to talk about what he was trading and compare notes. So one day Bill came up to the research department and was giving us a pep talk to the research staff, basically on everyone should be involved in the market and learn and have the potential to change your life. And then Mike went up to Bill and they were chatting, and I thought, you know what? I should get on his radar because he doesn't even know I exist. And so I went to my boss in the research department, told them that I was interested in being a PM if a position ever turned up. And at the time, we had to trade through the firm.
Mhm.
We had a small discount brokerage that O'Neill owned. And anyway, they looked at my results, and Bill came in one day and sat next to me and took me to lunch and hired me.
Yeah,
So
that's awesome.
yeah, it was awesome. It was really awesome. And I started out as really an analyst to support the portfolio managers. And after about 6 months, he started me off with a small account. And I've been doing it ever since.
Yeah,
And I love
man.
it.
Yeah, that's fantastic. And I actually want to circle back to what you said about experiencing your first bear market because I think a lot of traders right now are maybe in that same boat. So, what were kind of the lessons that you learned from that bear market, and maybe also obviously the 2001 bear market that you kind of take with you today? That you think people watching, or maybe this is their first bear market, or maybe their second, you know, could benefit from.
Well, so Richard, to be honest with you, I've learned the lessons, but I keep relearning the same lessons.
Yeah.
And so, and I think that might be a message to the viewers of this podcast is that, I've had quite a roller coaster career, and even this past year has been literally a disaster in my account, which I didn't think I would have to revisit these same lessons that I seem to have to learn every so often. So I think it's okay that, repetition might be what's required to kind of evolve and grow. So this, I guess, a message to the viewers is if you've experienced a market downturn and maybe made some mistakes, and maybe it's not your first time, it's okay. The market will always be there, and we can strive to be better. So the main lesson, Richard, is to trade in line with the market.
Hmm.
And it's really the M and can slim. It's don't think you're smart enough to trade to make money in a going against a trend. So if you're a long trader, which I am, I rarely short. You're not going to make money on the long side in a bear market. It's just your hit ratio is going to be terrible. For every one that you hit that you're up on, you're probably gonna have 3 or 4 that you're down on, and you're gonna net lose money.
Yeah.
And as you lose money, you're gonna lose confidence. And confidence is key to trading. You cannot trade well without being confident. So I think really the main lesson from the downtrends in the bear markets is to have the kind of the foresight and the patience to just sit out and or maybe try shorting if you have that ability. I mean, for me, I think you're imprinted with how you first made money. So I made money in a bull market. I'm always thinking of buying. It
Hmm.
doesn't even occur to me to short until it's kind of like late in the game. And people who made their money shorting at the beginning are always looking for shorts. That it's just, I think it's a natural tendency. Livermore said, it's not the bull side or the bear side, it's the right side. So I think the truly great traders have that flexibility to go long and short and have no bias. But honestly, I'm not one of them. I mean, I've made almost all my money on the long side. And so did Bill, by the way. So, and given that markets over the long term do have a tendency to move up more than down, I think it's okay to be that way. But it's really key to sidestep those periods of time when the window simply isn't open for making money. So I think that's the main thing is trade in line with the trend. And when you are trading well and you're maybe just in a couple of great stocks that are doing well, there is that tendency to take your eye off the market because you're just focusing on your stocks. And so I think it's important to kind of have a routine where you actually are looking at the indices, every day and really analyzing them and trying to determine, are we extended? Is there distribution in the market? Are we trading above, the moving averages and all that stuff? So Mike Webster has once said to me, or said maybe it was in an interview, but we worked closely together for years. Nothing good ever happens below the 21-day moving average. And it's so true. If you just look at the 21-day moving average and put that on a chart of the NASDAQ, when you're trading below it, you're not gonna make money. It's just so trade in line with the trend is really the most important thing. And then by doing so, the odds are in your favor.
Yeah, I think that's super important. And coming back to your experience at O'Neill, what was it like working with Bill? And also, what were some of the key lessons that he kind of passed on to you as you worked with him as a PM?
Hmm. Well, working with Bill was amazing. And Bill and I shared an office for a while together, which was really a dream come true to really get to know him on a really like a deep level. Like I felt like we really like he was really a mentor
Yeah.
in many ways. And I guess what I would say, the things about Bill that were so unusual was one, he was very humble. Um, and very no one worked harder than Bill at the firm. I mean, it's his company, but he was just relentless how hard he worked, and he was always trying to make improvements to the newspaper, to IBD, and just yeah, really hard worker. And I think most importantly, he was optimistic and also very, in a way, very forgiving because he would let you make your own mistakes and of course let you figure it out. I mean, eventually you had to figure it out or there'd be some issues, but he never really told you what to do. He just let you kind of figure it out. And I remember in 2007, I was having a tough year. There were a few things that were really working and I didn't have positions in them, like Croc. That was the year Crocs had a big move,
Hmm.
and maybe Apple was having a big move, and somehow I was struggling that year. And it wasn't until August, September, we had a run, and I had a huge run. In 2 months, I was up nearly 100%. And everything was clicking for me. And I had a whole like thesis that how the year was going to end. Well, we ended up peaking in the first week of November, but I was planning on playing it out toward December, and I had a whole plan. And the market peaked and started to go down. I started losing money in the firm like really quick and big. And I remember I had like it was like my fourth day down in a row, and I was losing a lot of money. I mean, I was up 100%. Next thing you know, I was up 60%. Well, that's a 20% pullback in like 4 days.
Yeah.
And the phone rang and I was at home actually, and I could see Bill O'Neill. I'm like, oh my God. So, I answered the phone and Bill was just totally cool and chill. And he said, hey, just want to make sure you're paying attention, that you're around and you're looking at your portfolio and, give me your thoughts. So, again, I was down a lot and off the top. And I explained my whole thesis and what I was doing and what I was planning and how I was positioned. And he just said, okay. He said, one way or another, you'll learn an important lesson. and that was it. And then the next day again, I was down and I just went to cash, and I was in cash for a while, for months after that. But yeah, he let you kind of, he really trusted. I can't speak for everyone, but he really trusted me
Yeah.
and let me do what I was going to do, and never told me, he never said to sell something or to buy something. He just wanted to know that you were thinking and that you had a plan.
Hmm.
So I think it's hard. Like it's hard to trust someone with your money. And he, especially for someone as capable of Bill, knowing that he could do it all on his own, he didn't really need everyone to manage his money. He could do it himself, but he really did trust the PMs. Um, and I think, yeah, one, I always appreciated that, but yeah, it was I think that it's hard to do, and he was able to do it.
Yeah. And is there anything that he kind of said to you that really stands out in your mind of like changing how you thought about the market or thought about trading or thought about managing risk, or just kind of a memorable moment or conversation that you had with him that had a really important lesson that really changed kind of how you view things?
I think there's probably many conversations like that, but I think the thing I would take the most from Bill is that there are periods of time when we were trading during a bear market where there was extended periods of time where we couldn't make money or we weren't trading, and it's discouraging. And during these periods of time, you start to dig a hole for yourself, and you've got to, as a portfolio manager, eventually fill that hole before you get paid.
Right.
So that can take time if you're digging a big hole. And so Bill was just always optimistic and said, look, what do you think? You're always going to be moving up the whole time without any drawdowns or setbacks? I mean, it's a normal course of action to have kind of ups and downs as you're trading. It's not just a ride up. We want to try to manage our risk and manage our drawdowns, but basically he was always optimistic that the market will give you those opportunities to come back, and you just have to be patient and ready for them. And I remember one other period, I can't remember what the time frame was, but I was just off my game. And normally we trade in a very concentrated way. So if I ever had more than like 8 positions in the firm, it'd be very unusual. And even if I'm like fully invested on margin, I mean, we're pretty concentrated. And because I was just not connecting with the ball, I ended up with like 20 positions, which I never have 20 positions. And he called me and said, what are you doing with so many positions? Like, why do you have so many positions? And I said, well, I can't, figure out where the leadership is. I'm having trouble connecting. And he just said, you know what? Go back to the basics. Um, it's okay that you struck out a few times, but just go back to the basics. He always used like baseball analogies. He was very
Yeah.
into baseball, and like, go back to the rules of, how to hit, how to swing, how to wait for the right pitch, wait for that fat pitch, and go back to the basics, but don't change your style. Don't, take on a bunch of little positions, just trying anything. Just kind of go back to the basics. So, that I would say that is a super important lesson, because we are all going to experience losing streaks and periods when um, we're just not trading well.
Yeah.
And the thing to do in those periods of time are to really stop trading, do a post analysis of, what are you doing wrong? Are you chasing stocks? Is your timing off? Are you breaking certain rules? And then come back small. You don't want to
Hmm.
come back in a big way trying to make your money back quick. Start small, start connecting, start putting on a few winning trades. And it's amazing how your confidence will bounce right back with a few winning trades. So usually, when you're coming back from a losing streak, the objective isn't really to make money so much as it is to get your confidence back, because again, confidence is key if you're going to make money trading.
Yep, and I've got plenty of questions. I know a key subject that we want to talk about is trading psychology, and we're definitely going to cover that. I just got a few more kind of
Yeah,
background stuff here.
sure.
Um, I know that you, Mike, and also Ross were kind of tasked with building a model book of kind of that '90s bull market period. I wanted to hear about kind of what that experience was like from your perspective, and also if you learned anything really important about finding winners from that experience.
So yeah, I was tasked with a few model books over really since I started at the firm as a PM. Um, I, I put together a few model books with Ross and then particularly with Mike, covering all of the 2000s and actually all the way up to just the current period. In fact, we just kind of finished working on that. And I think the whole point of the model books is that history repeats,
Yeah.
and there are, every market cycle has its winners. Those winners are usually not the same as they were in the prior period. So one, it's kind of an optimistic thing to realize that there's always going to be new leadership and new winners if you're open to that possibility and focus on finding them. Um, yeah, in every market cycle, you're going to have your winners. And I think, I've always created, in a way, my own model books just with the stocks that I trade. So I might have my own folders and my own notebooks of my best trades and marked up where I bought and where I sold, because sometimes what's really critical, I think this can maybe even help the audience, is sometimes you will lose your way and you'll think, or at least this, like for me, I'll think, how did I make so much money? Like what did I do right back in this time frame? Like I don't need like somehow sometimes when you're off, like you think, well, how did I do it? Like, well, I don't even remember like what I did. It's like it's not working now. And I'll go back and I'll look at those periods of time where I had great success. And usually they're attributable to a very small number of stocks. So I would say maybe 5 to 10 stocks a year is where I make 90% of my money. And I'll have these stocks and I'll look at, okay, well, what did I do? Where did I buy it? Where did I sell it? And then I'll put them up on a bulletin board so I can actually look at, like, okay, one, I've done it. Two, this is what they look like. And interestingly, they always look the same. The stocks that I buy coming out of some kind of consolidation, whether it's a stock breaking out to new highs or maybe kind of a turnaround stock that's kind of turned the corner after a downtrend and is now trading above its moving averages and everything's kind of starting to trend back up. But in one way or another, they're all stocks that are in uptrends in markets that are usually trending up. And again, if you just stay in phase with the market and kind of not fight what the market's telling you, and just be open to, what, when something's working, it's working. You do it. You don't question it. You can do really well. So yeah, I think like the point of the model books and just maybe keeping a notebook of your own winners is to see, like, how did you make money in the past, and it will work again. So I think that's really what I've gotten out of the model books is history repeats. You kind of just want to look for the same types of things, growth companies that you can have conviction in, that are trending up and that abide by the moving averages. And when they peak and they're out of favor, and you move on to the next one.
Yeah. And if you're able and willing, I'm sure a lot of people would love to see, a chart markup from the past. If you could post that on Twitter, I think people would really dig that. If you're able to. Um,
Yeah, I could do that.
yeah, and this is always kind of my favorite question to ask, and it's kind of about routine. So I'd love to hear, what does a kind of day in the life of a portfolio manager look like? What do you kind of do on a day-to-day basis to track the market, enter positions or manage positions if you need to, and just set yourself up for success while trading?
That's a good question. So I do most of my screening after the market. So I don't, being here on the West Coast, I don't want to wake up at 4 in the morning. I have a 6 a.m. meeting every morning for some portfolios that I run in the firm. But really it's I come prepared with a list of stocks, so like I can, I'm kind of old school, but I mean like I wasn't prepared for this, but like I have, I write down the stocks that I like,
Hmm.
that I'm looking at. Ones that I'm, maybe more timely, I circle
Hmm.
on here. In fact, where's this? Let me see. So usually what I'll do is I'll write down um stocks that I'm interested in. And this is based on screening.
Hmm.
Um, and I don't know if you could read this page, but it's divided into different columns. So stocks that are in uptrends, stocks that are breaking out of bases, stocks that are pulling back, that are already in uptrends, stocks that are forming bases, and then turnaround stocks. So these would be ones that have come off a lot but might be turning up.
Right.
And I'll keep this list of stocks. Sometimes things will fall off the list, things will come on the list, and I will put alerts on them in Panaray, or you can do the Marcus Smith, or even in my uh, the platform I use to follow my stocks. All the tickers. I put alerts, so I'm alerted when things go off, and yeah, and that's my basic process. With regard to screening, I don't screen every day. I think there's people can over screen. I mean, the truth of the matter is, if you're looking for a stock breaking out, you'll be able to find one every day. And that doesn't mean you should trade it or buy it. My personal opinion is, I mean, I've been a swing trader my whole life. So for me, the sweet spot's always been a holding period somewhere between 2 to 3 weeks on the fast, on the short side, and 2 to 3 months on the longer side. It's usually I'm somewhere in there. But that being said, and maybe we can talk about this later, but I have changed my personal style for my own accounts to be more long-term oriented. And everyone knows I've had a position in Tesla for a long time, which has been excruciating over this past year. Um, People are like, well, what do you do with Tesla? So in my non-margin account, I have not sold a single share of it. And I've said my objective is, 5 to 10 years. I'm going to hold it for 5 to 10 years, because I think it could be a stock that ends up like Apple.
Hmm.
But the truth is, even Apple had periods where it fell over 60%, in the 2008 period. It had a couple of drawdowns in the 40% range, a number in the 30% range. And so it's I was actually just looking at this, and I was kind of thinking about what I might talk about with you is, there was a period in 2005 when I had all of my personal money in Apple.
Hmm.
And Apple, I don't know if you would recall this, but Apple started its major move in 2004. The first quarter of 2004 is when we kind of first identified it. And that's when it really started its big run. And this is years before the iPhone was even conceived. This is during the iPod days.
And iTunes
And
just come out, I think. Yeah.
yeah, and so Apple started this huge move, and we all made a lot of money in Apple in that early time frame, and over the years. But Apple has been up almost 450 fold from that period to its peak of last year. And I certainly didn't make 450 fold in Apple. And so I think, having gone through that experience and never having enough conviction to kind of hold Apple and really try to get more than just like a triple digit move in it, but like truly a gigantic life-changing move. Like, I think that's where real wealth is built, in some of the longer term. Being right in a big way is where the real wealth is made.
Right.
I've done really well swing trading, but if you look at, the richest investors in the world, most of them, I think, made their money being right in a big way over a longer time period. So I think Tesla might be my opportunity, or at least I thought it was. and I don't want to mess it up. So I've just, I'm still up on it from 2020, up several fold, but it was a brutal year, Richard. Down
Yeah.
65% in 2022 was rough. So in any event, so my style has changed a lot in my own with my own personal money to some extent, but talking about my routine though for the firm, which is obviously different and much more active.
Yeah.
I screen about once a week for new merchandise. I screen when I need to screen because I think there's too much emphasis placed on screening and technicals and not enough work done on fundamentals and really trying to trade something you have conviction in that can actually become something.
Hmm.
There's nothing wrong with short-term trading and just trading off a chart, but I think the real money is in knowing what you have and actually having something that can be like a model book type stock. And that's what Bill's Cansum is really oriented toward finding the next leaders. And these are leaders that will have runs for, minimum of 6 months to maybe a year and a half. Somewhere in there is like a sweet spot. Or longer if you're willing to sit through bases. So I screen about once a week. I usually screen on the weekends. Oftentimes, what I'll do is simply look at all the industry groups and look at the ones that are improving and moving up the ranks.
Yeah.
And then within those groups, really look at every single stock in there and try to find the best merchandise. You always want to, look for the leader, not the laggard. So, those are ways that I find stocks. And I do have a preference for, and I've always made my money in technology, retail, and medical related. So those are kind of those growth categories.
Hmm.
I've never made money in an energy stock, and I'm not saying it you can't because like oil, energy was the place to be last year. But I'm really looking for kind of those innovative companies have that I believe have the potential to kind of change the world. And that's why why I've been trading in Tesla in such a big way. It's because I think they're levered to um, all of the big growth trends that are going to play out in this next decade and longer. Um, so anyway, I don't know if that answered that question or not, but
No, it definitely does, and I relate to you being on the Pacific Coast, not wanting to wake up, super early. And you may have already touched on many of these, but I was wondering if there were kind of any aha moments or key turning points in your trading career where you really kind of made a single shift or a few shifts, and you feel like it really made a significant difference in your performance and how you viewed the market.
well, I'm sure there's been many aha moments, but I mean, just to repeat what I said before, I've had to repeat most of my aha moments because I seem to, I keep a trading journal and I only write in the journal when I've had a tough time in the market. No one likes to write in their journal when things are great. Like who has time? You're just enjoying the moment. And the funny thing is when I look at my journal and I look at what I wrote in all these previous time frames, I'm always writing the exact same thing I wrote before. So it's in a way like I know the lessons. It's just I tend to keep repeating them. So um again, I think the main things I've learned, and I think I learn more from my failures than from my successes in a way. But one is really being careful of when you're on a tremendous winning streak, there's this tendency to um, take your eye off the ball and
Yeah.
start to, in a way, almost daydream and extrapolate where you're going to be, based on your last, how you've been doing in the last 3 months, 6 months. And when you do that, your focus only becomes on the upside you're gonna gather as opposed to the potential downside that you're not even looking for. And I think that's what happened to me in 2022, with Tesla. I was coming off, 2020 was my biggest year ever as a trader, even bigger than the internet bubble. So, my margin account was up like almost 1400%. And then in 2021, I was up almost another 200%. So that's like a 41-fold move, 42-fold move in 2 years. So when, I was thinking like, okay, I have it, I figured it out, I have the right stock. And I was only looking where I was going. I was not looking down below. And I honestly did not ever conceive that Tesla could fall 76% off its high. I'm still astonished by it.
Yeah.
And so I think one aha moment, which is very recent, which is kind of a new aha for me, is if you're going to try to play out a long-term secular move, you better not do it with any margin, because you will not survive the potential drawdowns that are inevitable in every leader.
Yeah.
So I've been very open about this. I got my margin call last summer, and I lost a tremendous amount of money, in my margin account, just having too much exposure in Tesla and other kind of growth stocks. I mean, in a bear market. So I think really being cognizant of your risk and having a line in the sand
Hmm.
where you say to yourself, below this level, I'm done,
Hmm.
no matter what. It's really important. And I kind of do that it's like people say, like, do you put in hard stops or mental stops? And I just always put in mental stops. But the problem with a mental stop is sometimes you keep changing it. So it's really important to have a hard stop in there when your results start to get away from you, and maybe your psychology starts to change, and maybe you start to make excuses, and it can happen to anybody, that you almost have to put in that hard stop just to protect yourself from yourself. And so, I listen to, there are some like great traders, like Bill never made excuses. Bill, I've seen him turn on a dime. He could be so bullish. One thing happens, boom, thing is sold out. And I'm like, wow, how did he do that? And then maybe the next day or two, things reverse again and he goes back in. So he was incredibly flexible. I listen to guys like Mark Minervini, so disciplined. Like, that guy will never blow up or never have issues on the downside, because he's simply so disciplined and pays so much attention to risk management. So I think that's probably the area that for me, maybe that's where I get in trouble, and maybe that's part of the reason why when I'm on and when I'm making money, I usually do better than most, because I'm more aggressive than most. But
Hmm.
it cuts both ways. So I think, to be a consistent winner, you have to manage your drawdowns, because large drawdowns are the kind of the enemy of compounding, and compounding is really the secret to building great wealth. So you need to have your risk controls in. And if I have any aha moments, is that I need to do a better job with that.
Yeah. And they're the enemy to confidence as well. They really take that away, that
Oh,
mental capital. Yeah.
100%. Yeah. Yeah, drawdowns hurt on many levels.
Yeah. And I want to dive deeper into that because I know I really do want to focus on trading psychology. So first things first, taking it kind of a general perspective, how important do you think it is for traders to work on their trading psychology, work on that emotional awareness, and just focus not only, on technical analysis, fundamental analysis, but also on that side of trading as well?
Well, Richard, I think it's the most important thing is your mindset,
Yeah.
and being aware of your psychology, and just, you know, kind of how humans act just behaviorally. We all have common, we're kind of all afflicted by the same things. And I think mindset is really what separates the greats from everyone else. I mean, I think Technical analysis, I think anyone can learn. You can go to some workshops, read some books, and really a lot of it is just experience and just staring at charts and looking at charts and researching. But I don't find that particularly difficult to overcome. I think anyone can learn the fundamentals, anyone can learn the technicals, but not everyone can. Some people just aren't cut out for trading, and everyone wants to do it, and it looks so simple. And the truth is, it is simple. All you have to do is press a button to buy and sell. I mean, anyone can actually do it, but not that many people, I think, can do it really well. And I think it's because a lot of people just aren't cut out for the swings. I mean, it is quite emotional when you're looking at your net worth change on a per second, basis. I think that it's an emotional thing. So I mean, it doesn't affect me that much as far as I mean, to for good and bad. I mean, when I'm making money, I'm happy, but I'm like used to it, and as your account grows, you just become accustomed to larger numbers.
Yeah.
Um, and on the downside too, I mean, in a way, I wish I was a little more tuned emotionally, because when I'm losing money, unfortunately, I can sustain a lot of pain. And I read somewhere in a trading psychology book that great traders don't accept pain. There's no reason to, really. So if you're following rules, why would you want to accept pain? So why would you want to put yourself in that position? I guess for me, because I'm trying to play out some longer term moves, I'm willing to accept some drawdowns, but you do need a way of limiting them. And I think it's really critical to, if you can keep your account within, I'm going to say 20% of an all-time high at all times, then I think you're probably doing well if you're an aggressive trader that uses leverage.
Yeah.
But once you start to fall more than that, 30, 40% off your peak, again, it wears on you mentally and your psychology, and it just you start to ruin the whole compounding
Yeah.
thing, because you ruin the time it takes to get back. So anyway, I think mindset is really critical, and taking responsibility for your trades is really important too. I think a lot of people will blame the market, or even when people know that I've had a tough year, and the retort I usually get is like, "Oh, well, everyone had a bad year. It's a bear market. It's not your fault." Yeah, it is. I didn't have to be in that market. I didn't have to make those trading decisions. So I think taking responsibility, having a mindset that revolves around confidence, and no hesitation, because if you hesitate and question yourself or question your edge, you're not going to do well. And a lot of people have a tendency to hesitate and wait, and instead of acting at the buy point, they'll do more research, or they'll wait for more buying volume to come in until it looks more obvious. And you always feel better when something looks more obvious, but really what you're doing is adding risk to the trade.
Mm-hmm.
So trading without hesitation, being aware of when you are maybe becoming exuberant, and that's another thing that I have trouble with. And when you are doing really, really well, and you're in that kind of intoxicating moment, it's hard to think that you'll ever lose money again. It's you just forget, like, you forget the losing streaks. You're just looking up above, and having the foresight to kind of know that, okay, I'm getting a little bit out of hand here, and taking money out of the market. And this is, I guess, another important lesson I've learned, is it's really important. And Livermore talked about this too in Reminiscences of a Stock Operator. When you're on a winning streak, it's okay to pull money out of the market and leave it out of the market. I think that's part of self-care.
Mm-hmm.
And I did do that to some extent, when I was making all that money. I bought a new house, I paid cash for it, I fixed it up. I mean, thankfully I live with no debt. but I wish I would have pulled out more
Hmm.
so that, there's no reason for me to ever worry about money again. But having sustained some of these losses, I do kind of worry about it. So there's no reason for that. So taking care of yourself, pulling money out of the market when things are a little bit too good, and realizing that really incredible outperformance usually isn't sustainable. It will end. And so kind of just being aware of that is really important.
And are there any specific, techniques or ways that you're trying to be a little bit more aware of when you're getting towards that over exuberance, that overconfidence, where you might start to realize, start to let things slip a little bit? Is there anything you're kind of working on, more journaling, kind of mapping your emotions a little bit like that, so you're kind of more aware of it earlier, so you can take those steps that you need to kind of
Yeah,
protect
that's
yourself?
well, I've tried so many different things, Richard. I actually programmed little pop-ups in my Excel sheet. So like if I fall a certain percentage off my high, I'll get an alert like raise cash or get off margin, or
Right.
I have these messages to myself. But the truth is I usually ignore them or don't act on them the way I should. Um, so I mean, I am absolutely committed to taking more money out of the market in my next run, and just leaving it out and just having it in a bank account. And I've always been oriented toward maximizing my net worth. And so every penny I have, I'm trading, because that's where I can make the most money. And having a lot of money in a bank account just doesn't make sense to me, because it's like putting it under the mattress.
Right.
But in those tough times, it actually is important to be able to, not be stressed out. I mean, if you're stressed out about making your daily bread in the market, you're probably not going to do too well. I mean, you have to be loose and be able to take risk. And if everything is riding on a trade, I think it's too much risk. So I think as you are having success pulling money out of the market is not all of it, but just, pulling out little bits here and there can, I think, add to your success as a trader, because you won't be so worried about having to perform perfectly well, because uh, the market trading is, something where we're always dealing with uncertainty.
Yeah.
There's no certainty in the market. We don't know which trade will be a winner or loser. All we can have confidence in is that if we have an edge uh, and we're in the right environment, then you'll be a winner over a longer period of time.
Right.
So I think focusing on the process of trading is really more important than focusing on any individual result of a trade. So just, kind of stick to the process. But um, yeah, I don't know. That's what I have to say on that one.
Yeah, that's good. And getting back to that a little bit, is there anything you do, whether it's exercises, maybe it's something you say to yourself, or just something as a part of your routine to help, at the beginning of each training day, you kind of set yourself up by trying to be calm, kind of limiting that stress and managing that stress in a way that you can perform and make decisions clearly, that aren't impacted by outside emotions or things outside of your process.
Yeah, it's a good question. Over the years, I've tried different things. I've tried meditation, which I don't do well. My mind is always racing. I should get back to that though. I've tried yoga. I exercise every day regularly. Um, and I have at times written an affirmation that I would start my day out with, to kind of put me in the right time frame, or not, I mean, not time frame, mindset. And I've gotten away from that, to be honest with you. I mean, I have it, but I don't always look at it, because like I said, usually we only rely on those things when we're when we're struggling.
Right.
when things are working for us and we're making money, we usually already are in a positive mindset and we're acting in a confident way without hesitation. It's when we fall out of that, when we kind of fall out of the zone, is when you need a way to get back in the zone. So I think it's important to do all that to kind of keep you humble and keep you aware, because I think the way we get out of the zone is um, success kind of breeds complacency
Yeah.
and um, relaxing your discipline. And that's how you fall out of the zone, is when you start to break the rules and just deviate from what you're doing. Your results are gonna, diminish, and slowly but surely you'll lose money and lose confidence. And that's the cycle that we're kind of all on as traders. So the goal is to stay for as long as you can in the zone, trading well and consistently making money. And I think that the best active traders can do that. And it's almost like habit now for them. I think that's how it was for Bill. Um, I think for most people, though, we struggle with that kind of, that cycle of we're doing it right, we're making money, we start to relax our rules, we lose money, and we keep replaying that circle a bit.
Yeah.
So but the market's always there. I think the thing to remember is there's always a new winner on its way. There's an ocean of possibilities, and it's really, as long as you're in the right mindset and working hard and searching, the opportunity is always going to be there. It's not like you've missed your window, So that's the beautiful thing about trading is if you're there and you still have your capital, there's always the ability to kind of to come back if you've had a drawdown, and hopefully to just to build wealth and not suffer the drawdowns, and improve on that and move toward becoming a consistent winner with relatively minor drawdowns, as opposed to the boom and busters, which I have a tendency to be a little bit more in that category, because when I make it, I make a lot, but I always give back a lot more than I should.
Yeah.
So
Yeah.
the room for improvement.
Yeah, always for everybody. And a common issue I see, especially on Twitter, is people are always kind of anxious about missing the big move, and even during this bear market, throughout it, really, this rally, this is the start of the new bull, this is the start of the bull, each one, and then it fails. Do you have any thoughts or insights on how people can kind of overcome the FOMO, the fear of missing out, and just kind of accept that what's going to happen is going to happen, and that if you're positioned properly, you'll be there to take advantage of it?
Yeah. Um, well, are you talking with regard to the beginning of a new bull market, or just like an individual stock that starts to kind of catch?
Yeah, either or,
Yeah.
the next big leader, or just the start of the next move upwards.
Yeah. I mean, I guess for me, because I'm usually oriented toward buying pullbacks and selling FOMO in a way, it's easier for me not to get kind of carried away and kind of chase stocks. Chasing is really adds to your risk. And so I get it. I mean, everyone wants to be part of the new hot thing, but almost always the stock that gets away from you will give you another proper entry point if you're
Right.
patient.
Right.
So I'd say you can have pretty much have confidence in that sometimes. And I like how Dave Ryan calls this his mental health buys. I've heard him talk about on IBD Live. Like sometimes maybe a stock has gotten away from you and you just really want it, but it's not a proper buy entry point. You can just take a real minor position in it just so that it's in your portfolio and in front of you,
Yeah.
and you're kind of paying attention to it. So I think there's nothing wrong with doing that. I think that makes a lot of sense, actually. And sometimes something will take off and it should be bought. So not because everyone else is buying it, but it kind of will give you, like, I was a little bit late to Tesla when it broke out in 2019 and early 2020. I had kind of given up on it because, I got chopped up so much in 2015 and 2016 and 2017. I went in that like 5-year consolidation period, and I was kind of like done with it. Like, I just couldn't make money in the stock. It wasn't trending.
Yeah.
And when it finally took off, I just started trading it fast. And like I'd take a few points out of it, and it just kept going higher. And I'm like, wait. Maybe this is it now. Maybe it finally is time. And so I kind of did a lot of research and kind of got my conviction up. And that's how I kind of started to trade it in a more kind of patient, larger way. But yeah, I think uh, traders should just realize that stocks are going to get away from you. And when they do, focus on something else, put it on a watch list, and then wait for a pullback or another entry. Um, it's tantalizing to kind of swim toward the shiny object, and there's always going to be one, and there's always going to be one the next day. So uh in a good market, there's enough breadth to find other winners.
Hmm.
And if something gets away from you, just put it on a list and wait for it to come to you. That you'll always be more successful when the stocks come back to you as opposed to you chasing it.
Yeah, great. And we've talked about how important this is. Is there anything that you do to work on keeping your confidence up there and boosted, and also at the same time, keeping that discipline high, so you're making sure you're following your rules, and honoring your system?
Yeah. Well, again, that's probably my weakest spot is relaxing my discipline when I'm on a huge run. And I keep a folder of all my rules, and it's probably something I should maybe reread more often. You always think that, when you're doing exceptionally well, like maybe you figure something out or you're doing something different, and that's why things are working for you. It's usually not the case. Um, so I think just being aware of, I think some very basic things can really keep you out of trouble. One is kind of having a self-awareness when you are making too much money. And like, no one should be up 40-fold in 2 years. Like, that's too much. Even for someone who's great, that's too much. And the truth is, I think one reason why I tweeted about this, why I think Tesla came down so much, was just simply too many people made too much money in it. And the market is not going to reward that kind of greed if you have no sell discipline. And so I think it's a lot of this, is fallen by 2/3 last quarter. I think it was really a long process of people capitulating and getting margin calls and this over leverage and over concentration.
Hmm.
So having an awareness of when really you made too much money, and you should kind of thank the market, take some money out, I don't know, buy a house or do whatever you're going to do, but kind of realizing that no one is that good. Um, Having that line in the sand. So to protect yourself from yourself, because that's really what you're talking about, is maintaining your discipline and maintaining your confidence,
Right.
is you want to protect yourself from overconfidence. And it's very easy to become overconfident when you have exceptional results in a short period of time. Um, not yeah, basically just being aware when things are too good to be true and acting on it, and realizing that, we have a tendency when we're trading, the money in our account, like, it fluctuates a lot, but it doesn't feel like real money, because normally, I go shopping, and if, like, I want to buy a pair of jeans and it's $200, I'm like, it's too much. I'm looking for something cheaper or on sale. But I could lose $200,000 in the market in a day, and like, all right, well, that's just like a normal day. My stock went down.
Yeah.
So traders are weird like that. We treat money differently. The money that's in the market, we treat differently with a different mindset than we normally would outside the market. So I think it's important to be cognizant of the fact that it is real money, and it can be life changing.
Yeah.
And so to really appreciate that and not take it for granted and be careful and thoughtful with your trades and with your drawdowns. So again, like having a line in the sand, being aware of when the momentum shifts. And like when I'm trading well, and I keep a spreadsheet of all my trades in real time, I might have blocks and blocks of, 50, 100 trades almost in a row. They're all winning trades. And then I'll start to get blocks of losing trades, and I'll have, loss, 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 loss. And something is shifting when that happens. Usually that's the beginning of a top in the market,
Hmm.
or maybe I'm just completely get out of sync somehow. But almost always my own trading account will tell me when things are getting bad and I'm out of sync. And really paying attention to that, being aware of it and acting on it, not just saying, oh, okay, so I've had a few losing trades, no big deal. Really taking note and realizing, okay, what is shifting and why am I losing money? And then making a decision to take some action on that.
Yeah, for sure. Um, and I just want to say, you gave an excellent presentation, which was uploaded to YouTube, A Trader's Journey, which we'll link below as well. I've watched that more than a few times. I think every trader should watch that, just because a lot of people can relate to that and find it very helpful. You've picked yourself back up and kind of refocused and been able to come back so many times during your career, um, which has been fantastic. What kind of goes through your mind at those turning points and allows you to perform again and you know and get back to trading at your best?
Yeah. Well, I guess because I've had my career has been a bit of a roller coaster, and I don't know that I put myself in the consistent winners category because my drawdowns are they're just too big for that, to be honest with you. So I really want to strive to improve on that just for myself. When I had my first blow up in 98, which during that little long-term capital management bear market, and I lost 2/3 of my money. I thought well, maybe it's a fluke that I made the money in the first place. Maybe I just got lucky and, we were in a good market. And I didn't really know whether it was me or just the market or maybe just luck.
Right.
Um, but now that I've, consistently done pretty well over a long period of time, and, uh, and have had some major drawdowns along the way and have been able to recover. I do have a kind of a deep level of confidence that I can do it. It's
Yeah.
just a matter of trying, hopefully not experiencing those drawdowns again, because no one wants to come back again. Um, so I guess I do have like a kind of an inner belief in myself, simply because I've done it so many times that I know I'll do it again. I don't know how long it'll take, but um, from that from the drawdown I suffered that I discussed in that trader's journey, I never dreamed that I'd make it back so quickly and go much, much further in such a short period of time. So in a way that was in a way a great message that if you're in the right thing in the right market, of course, post COVID, the opportunities were exceptional, right? And Tesla and Zoom and Spotify and not Spotify, um, Shopify, sorry,
Yep. Yep.
Shopify and all those stocks that were huge COVID winners. So we were in a very special environment, but I think having not just a belief in yourself, but really realizing that there are always going to be exceptional opportunities in the market, in individual stocks. And every cycle has them. The model books have proven that out. And if you're looking for them and you're in the right place at the right time, you can get a hold of them and really make life-changing trades that will really impact your life. You don't need a lot of them too. You don't need to buy 50 different huge winners. You just need a few big winners and string them together to really make a life-changing amount of money and really put you in a different place. So, just having done this now for so many years, I know that the opportunities will always be there. I know that as bad as these bear markets can be, they're always followed by bull markets and new opportunities. And in a way, like I look at this past year, which again was a terrible year for me personally, but I go, well, gee, this is pretty much the worst market I think I've ever been in. And the growth category has been so decimated, particularly kind of the speculative growth category.
Mm-hmm.
I think it's just a huge reset. And the truth is, in my opinion, growth and innovation isn't going out of style. It's going to actually, I think, come back stronger than ever. I think there's, EVs, AI, biotech, genetics. I mean, there's so much. We're on the cusp of so much innovation and um, life-changing innovations that I think there are going to be amazing winners in these categories if we're looking for them.
Yeah.
And again, this past year and a half has been, I think, a huge reset in these categories. And so I think, my eyes are wide open and I'm looking for them. And when the environment changes, and maybe we're at the beginning of this. I don't know whether the market's bottomed or not, but I think that the devastation in the growth categories has been as bad as I've ever seen it, since the dot-com bubble. So, so it's been pretty bad, but this will lead us to new opportunities. And I think if just be optimistic and have your kind of your eyes open, and there's going to be great opportunities going forward in the future. I don't know exactly when they start, but they could be starting now.
Yeah, absolutely. And going back to those themes that you're kind of looking for, what do you kind of use on the fundamental side of things to judge that potential if you're looking at individual stock within those themes? What would kind of spark your interest and make you say, hey, I should really dive deeper into this company, learn more about the story, and because I think this could be a next model book stock to market leader.
With some of those big kind of secular categories, or just things based on papers I've read or reading, like the research from the ARC funds, they do a lot of research into these kind of new innovative areas. One of the pieces of research that really helped me build my conviction in Tesla and the categories that they're levered to was based on a Tony Seba presentation that anyone can find on YouTube. He's kind of I guess like a futurist in a way. And he did a talk on the transition to electric vehicles and energy storage and clean energy, like solar, sustainable energy,
Mm-hmm.
and how they're all kind of coming together at the same time. And I think everyone should watch it. I mean, it's so compelling. And it wasn't really until I saw that, and that was actually referred to me or recommended to me by Jim Ropel, at our last level 4 master's workshop. We were at dinner and he said, you have to watch this. And I did, and thank God I did, actually. So yeah, I mean, I get it. So I get my research from different places, but Yeah, I mean, anything I can get a hold of, I'll read it. There's a really great guy on who has a YouTube channel named Dave Lee. It's called Dave Lee on Investing, and he does a lot of. He's a big holder of Tesla shares, and he might own some SpaceX too. But he has a lot of guests on his channel who they do deep dives on kind of AI, like innovative technologies, kind of new things that are happening, crypto, blockchain technology, things that are kind of up and coming that I find really interesting. And you can really get a lot of information from kind of specialists in these areas.
Mm-hmm.
But I try to take really more of a big picture view of it. Like Bill never got typically too much into the weeds. Bill was more of kind of like a big thinker, like what's the trend, what's happening. There's usually isn't necessary to understand every little detail about what's happening. It's we all know that AI is going to change the world, right? I mean, you can look at that new chat GPT, and it's incredible what this little platform can put out. So you can just imagine how it's going to change things in our world in the next decade. So I think, okay, I know AI is going to be huge. And so my first thought is what companies are levered to that and
Mm-hmm.
what's going to come out of AI. It's going to be, it's going to improve our decision making. It's going to lead to, having robots, autonomous cars, so I want to think of the companies that are levered to that. Microsoft is going to be one, Nvidia is going to be one, maybe AMD, Tesla is going to be one, and there's going to be lots of other ones, and there's probably going to be a whole slew of IPOs as well that companies we haven't even heard of. But yeah, that's what I do. We all know that biotech and um, gene sequencing and personalized medicine on a genetic level is going to be life changing. So what companies are levered to that? I mean, these are the companies that are going to probably cure cancer
Mm-hmm.
and rare diseases that have that affect people that we've never had a good way to treat. So there's just some incredible things that are coming our way, and I think it's a lot sooner than people think. And so yeah, I mean, I have these kind of big picture ideas of um things that are going to really affect society and our whole world, and just try to focus in on what are some of the companies that are playing in those areas that have leadership positions and can really lever the opportunities. So yeah, that's kind of what I try to do on like a bigger picture basis. And I think that's in a way kind of new for me over the past few years, really since I saw that Tony Seba um, uh, YouTube presentation.
Mm-hmm.
Because ordinarily I was being more oriented as a swing trader. I'm just looking for stocks that are set up to trade without really, if you're going to do short-term trading, you don't need that much conviction because you're not in the stock for too long. I think, but with this new orientation toward a little bit more of a longer hold and try to build wealth in something that in companies that really are changing the world, um, I've kind of changed my orientation. And if you're going to succeed in that, you better build some conviction and know what you're trading. So it's a little bit different than what I've done in the past, but hopefully the results will work for me.
Yeah, fantastic.
We'll see.
And um, I wanted to ask this question because I think it's really interesting to hear people's different responses. Um, how do you personally define risk when trading or investing, and what are the steps that you take to manage that risk?
Again, it's probably the one of the weaker areas of my trading is uh I sometimes take on too much risk, or I'm willing to suffer through too much of a drawdown. But I think the important thing is when you're buying a stock, any stock, you should have an expectation of what should happen. You should never just buy a stock. Like I would never buy a stock without consulting the chart, right? And I know, there's a whole slew of, not people that probably follow you and follow IBD and follow Bill, but I think most investors aren't looking at any charts. They're just buying a stock, without knowing what the chart looks like. And so when when you're buying off a chart, the whole purpose of the chart, there's two purposes. One is hopefully if you're experienced in chart reading, you can pick up clues that can give you an edge. So you can maybe pick up clues that the stock is under accumulation, that maybe it's that there's been capitulation at a bottom and new money's come into it. And these are like clues you can find in the chart. So hopefully it's a way of putting the odds in your favor. But more importantly, it gives you an expectation of what's normal. So if you know that, if you follow Can Slim and the different chart patterns, and you know where there's support levels, if a stock breaks out over that area, then how it should play out, because you have a notebook and you have a model book and you know how winners act and behave. So if the stock violates your expectations, right there, that's all you need to know, that there's something wrong. You don't need to consult the fundamentals or figure out, well, but I really liked it and I researched it and I think big things are happening. If it's not acting right, then you can reverse your position and just kind of admit defeat. Doesn't mean you can't get back in there. But I think that's an important way to manage risk, is really managing your expectations of what is normal for a stock. So always paying attention to the chart. And then, of course, there's always, the important, having a line in the sand, like how much is too much.
Yep.
You know, Bill has a 7 to 8% loss. I mean, I know a lot of people cut their losses a lot sooner than that. I think you can't get too cute. I think, especially in an environment that's not forgiving, you'll get chopped up all the time doing that. And if you're taking a little longer term view, I mean, I will take losses that are bigger than 7 or 8%. Maybe I shouldn't, but usually I think that sometimes um that's a little too narrow sometimes, depending on what you're in and the environment. But yeah, you don't want to lose too much on any one trade, particularly if you're a swing trader or a shorter term trader.
Hmm.
And yeah, just basing it on expectations of what's normal and what should happen.
Yeah, that's great. And you've quoted Livermore a few times during this interview, which I love. So I wanted to hear if you have any kind of favorite trading quotes. They don't have to be from Livermore or another trader. They could just be other random quotes that also relate to the market. But yeah, I'd love to hear a few that you have off the top of your head.
Well, I think everyone should read Reminiscences of a Stock Operator. Um, that's, of course, Bill's book is awesome, but Reminiscences was more of a novel, and that there's so much wisdom, like kind of psychology wisdom in that book, and tracing out Livermore's life. And he's had a number of quotes that I love in that book, that really ring true. I mean, I've highlighted that whole book and I've read it numerous times. Um, One is, man that can both sit tight, who can both be right and sit tight, are uncommon. It's a big swing that makes a big money for you. So that's kind of, I've been relying on that with my Tesla hold. That I remember Bill wrote in a number of the model books, in like he would handwrite like his own notes based on studying the models, just to be patient and to let a stock play out. Another Livermore quote would be, the real money is not in the individual fluctuations, but in the main movements. So I think it's easy to get too cute and overtrade a stock based on little, daily fluctuations, and kind of take your eye off the point that if you've done your homework and you're in a true uptrend, if you have the right merchandise, you can make a many-fold gain in a stock, even though it's going to be tempting to take 20 or 30% out of a stock in a short period of time. Don't take your eye off on the true uh you know it's the word I'm looking for, Richard.
The true trend, the
Like the
the
true
big move.
potential,
Yeah,
that can be reached in a stock.
right.
Um, so those are a couple of my favorite ones. There's another, it's not, I don't know if it's the quote necessarily, but well, I guess it's a quote. I don't know, I'm gonna misquote it, but Livermore said, um, taking a loss, like I'm never bothered by taking a loss. It's not taking the loss that causes damage to your pocketbook and to your psyche or to your heart or something. It was something like that, but it's like holding on to a loser is what kills you. It's when I take a loss, I literally forget about the trade the next day. Like it's once it's out of there, you've done what you had to do and you can move forward. It's when you know you should take the loss and your ego prevents you from doing so, that really weighs on you because
Yep.
you're violating a rule, you're not doing what a good trader should do. So in a way, you're almost like feeling bad about yourself to begin with. It's like it really like adds to like weakness. Whereas as I said, focus on the process and just realize that taking losses is part of the cost. It's just the cost of doing business as a trader. It's going to happen all the time. 40% of your trades will probably be losers over the long term. Um, that's a lot. 40% is a lot. So you better get used to being wrong and taking the loss and realizing that taking a small loss is actually a good trade.
Yeah.
Um, even if you lose money, it's a good trade. And there's many ways to have winning trades that are bad trades by getting lucky or taking a bad risk. And so being able to differentiate the two is really important. Um, and also read Darvis.
Hmm.
If you ever need a pick me up, read How I Made $2 Million in the Stock Market. That's a great book. Um, a great story of a guy who also had many failures off the bat and kind of figured it out. And very optimistic book. And the bottom line is, I think in the right market environment, you can make a fortune if you're ready and positioned and have confidence. So just have to be patient and wait.
Perfect. And outside of the ones that you already mentioned, kind of what are your favorite trading books that you feel can really have an impact on a new trader?
I tend to just reread the same books, to be honest with you. Bill's book, of course, Reminiscences, the Darvis book, Trading in the Zone by Mark Douglas, I think is a good one. I actually have that one on tape too. Sometimes when I'm off my game, I'll just listen to it when I'm taking a walk or something. God, I've got a lot of books here. Market Wizards,
Yeah.
great. I mean, I've got all the Market Wizards books. Pitbull, it's a great book. Um, I have so many of them. Trading to Win, Way of the Turtle, I thought was pretty good. So yeah, there's a lot of good books, but I think you just need a few. There's just a few great ones, in my opinion. Bill's book, Reminiscences, and the Darvis book, I think are my three favorite. I have the Mark Minervini book as well.
Hmm.
Um, I think he's very sound. I mean, I've never met the guy, but I guess we kind of run in the same circles because he's on IBD Live and I'm on sometimes IBD Live. And I know he's a friend of Dave Ryan. And I always see what he tweets, and I think it's always very sound advice. So it's probably a great book.
Yep. Yep. I'd
I
agree.
haven't read it yet, actually, but I have it. I bought it.
Yeah, great. And I always like to kind of wrap it up with one last question. What kind of general advice do you have for traders who maybe they're just starting out, or maybe they're more experienced? Maybe this was their first major bear market that they've been through. What general advice would you have to kind of inspire them and to push them to, become the best traders that they can be?
I think I'd say that it's the experience with most traders, most people who start trading, um, experience failure at some point in their journey. Many of the greatest traders have had blowups earlier in their careers, and the best ones are able to overcome them and come back and learn their lessons and come back stronger. So normal it's normal to have setbacks. So kind of don't reject them, just learn from them and realize that, again, the market is always going to be there for your next run if you're ready. So I think that should be comforting to know that there's not like you miss your opportunity. There's always going to be a new opportunity. Um, it Very few people have success right off the bat. And if they do have success right off the bat, it doesn't mean that they have a mindset that they kind of figured it out. A lot of times you're in the right place at the right time. And it takes time to realize, it takes a bear market to kind of show you your weaknesses.
Hmm.
And if you're ready to kind of act in the way you have to when the conditions are bad, and that means, pulling back, protecting yourself, protecting your account, protecting your psyche, um, and taking losses. When you have success right off the bat, you're not battle tested. So to realize that, there's going to be setbacks, it's going to be tough markets. You can't always outperform in every market. Um, and wait for your spots, wait for your fat pitches. And if you're patient and ready, you should always kind of keep your eye on the ball, keep your eye on the markets, and always have a watch list ready. Kind of pay attention. It doesn't mean you have to be invested, but you have to be involved enough to know what's going on. You never want to be caught unprepared. That anyone can do it. I mean, I don't you don't have to be a genius to be a great trader. I think you have to have some smarts, but I think more important than that is common sense and discipline and hard work will take you further than raw intelligence. So I think, having it all is great, but honestly, just working hard, sticking to it, and maintaining discipline is over time will lead you to good results. I really believe that.
Yeah, perfect. Charles, thank you so much for taking the time. And I know a lot of people appreciate your honesty and talking through your experiences. Thank you so much for taking the time to be here. I'm sure everybody watching enjoyed it immensely. Where can people reach out to you or find you if they want to learn more about you or your system? I'll definitely link the Trader's Journey down below because I think that's a valuable resource. But is there anywhere else where people can connect with you?
I mean, I'm on Twitter. I don't tweet frequently, but I'm on there every so often. People can kind of find me there. I've got that Trader's Journey posted on YouTube. And I'm on IBD Live occasionally. Sometimes I do some podcasts for IBD, but yeah, pretty much that's where you can find me is on Twitter.
Yeah, perfect. Well, thanks again for your time. To everybody watching, I hope you guys enjoyed this. If you did, please go ahead and leave a like down below. Subscribe to the channel as well for more great interviews like this one with Charles. And we'll see you guys in future videos. Take care.